So we have in the house, Rene. You're a real estate agent, right?
Mortgage. Total fail already.
I'm sorry. Okay, you know what?
You knew nothing about me until you brought me in.
She's your friend.
Yeah.
So, okay, Liz, you take over. Go ahead and choose. Welcome back with Get Real with Liz.
Welcome to a new and improved podcast that we're teaming up with Paso Robles Podcast and Get Real Estate with Liz or Get Real with Liz. And today my guest is a good friend of mine, Rene Martinez. He's a loan officer. And Rene, would you like to introduce yourself and tell us a little bit about who you are and what you do?
Who I am Rene Martinez, and I actually grew up in Paso Robles. Graduated from Paso Robles High School.
What year? I'm just kidding.
Fairly recently. And then I ended up going. Yeah. Then I went to Cal Poly, got my degree at Cal Poly, and moved to Santa Ynez. Now I'm in Santa Ynez, and I've been in Santa Ynez since 2011. So 14 years in Santa Ynez. I've been doing mortgages down there the 14 years, and I was doing mortgages in Paso Robles before moving down.
That's right. Yeah. And how do you like doing mortgages?
Doing mortgages. I love doing mortgages. I love being a mortgage broker, mortgage banker. I've done it all. Brokerage, correspondent, banker. Yeah.
Which portion of the lending side do you like the most? You know, being a broker, being a loan officer. I know that, a lot of people don't understand, but there's like a corresponding lender, a broker lender, working with a bank, you said. So can you tell us a little bit about the differences and which one you like better?
So correspondent lender and banker are almost the same thing. Mm-hmm. I mean, they're all almost the same thing. But as a correspondent lender, you're basically working under the umbrella of a larger bank or a larger lender that's allowing you to do loans under their name. Mm-hmm. As a banker, you're doing all the loans under that one bank. Mm-hmm. And you fund all the loans yourself, you underwrite them yourself, and as a correspondent lender, you can underwrite yourself, but you're still under the umbrella of other lenders, and you have multiple lenders that you can go through, like a broker. Mm. So a broker can use multiple lenders, multiple investors, and do loans for multiple different entities. A correspondent lender can do the same as long as they are a correspondent for those entities. And as a banker, you're doing it for that one bank.
And as a broker?
As a broker, you're doing it for anyone that you sign up with that you can do loans for, but they underwrite it instead of you. Oh. And they fund it instead of you. As a correspondent, you fund it yourself.
And which one do you like better?
I really enjoy the broker side. The broker side gives you more flexibility because you can basically go to any brokerage, any investor, any lender that's out there that you sign up with. Mm-hmm.
And Rene, I know that we used to work together back in the day.
We did.
With a corresponding lender. And so I used to do mortgage loans as well, but now I'm a realtor and now you're still a loan officer. Do you see any challenges, in different markets? Like, for example, during COVID, was there a specific, niche that was more lean towards, or is there pretty solid throughout?
Yeah, during COVID, rates dropped to like 2%.
Right.
3% interest rates. So during COVID, it was the purchase market and the refinance market. You were busy across the board. People were refinancing to get the lower rate, the lower payment, and people were buying properties because it was affordable. Mm-hmm. So during COVID, it was just busy across the board. Right. Refinances and purchases. As the market shifts, now we're seeing higher interest rates. Right. So affordability has been reduced, and people can't necessarily buy a home and afford to buy a home, nor afford the payment. Right. And the same goes with refinances. We're running into refinances that don't make sense. Why would you go from a 2.5% or 3% interest rate to a 6.5% or 7%? You wouldn't do that
unless it's like something drastic,
unless there's a major need.
Right.
What we're seeing now is financial need. Mm-hmm. So you're going to get people that are desperate to consolidate debt. Right. Because it's gotten really difficult to survive in this economy. So debt consolidation is big, and it's the best way to do it. Most people have plenty of equity in their home, and they can use that equity to relieve themselves of that financial monthly burden.
And if they don't want to refinance because they do have a lower payment, is there other options as well that can possibly help them out?
Yeah, line of credit, home equity line of credit, or a straight second mortgage to consolidate debt.
So there is options.
There are.
And then me as a realtor, I do see a lot of structuring offers, for example, right? So I have a lot of first-time home buyers that want to...
Wait. So now we're shifting into...
Yes.
Okay, we're shifting. We're going...
we're just kind of going all different directions.
We're going to go into sales and purchasing homes
exactly.
now. Okay.
So now we're going into, as a realtor, I do see a lot of clients that come up to me and they tell me, oh, yes, I'm pre-approved. And, me being a loan officer in the past, I understand what a pre-approval is versus a pre-qualification, right? So they'll come and be like, oh, I got pre-qualified for $750, right? But then they don't even know exactly what their payment is, or maybe they're not really actually approved. Do you do... what do you think will be a good tip or suggestion where we can structure better deals, offers? Because, sometimes they'll be like, oh yeah, here's a pre-qualification letter, but the lender sends me a pre-qualification letter, but they're not really approved. There's a difference between pre-qualifying and pre-approval.
I'll take that and ask you the same question. What is it that you understand? What's the difference that you understand between the pre-qualification, pre-approval, and full approval?
So for me, because I was a loan officer, a pre-qualification is basically somebody that comes in and just kind of tells me, I make $5,000 a month and, I have one car payment, but I really don't give my full information. And therefore, they just kind of enter numbers and they kind of tell you, oh, here's a pre-qualify estimate, kind of. To me, that's like an estimate. But an actual pre-approval letter is running the numbers, getting pay stubs, checking the credit and, making sure how much debt they have versus how much income they receive, their debt to income ratio. And the full underwriting approval to me is once you send it into DU. Well, there's two different ones. Right? There's DU approval and full underwritten approval. So, I would like for you to express that, but I think it's very important for people to know because they have a misconception about that.
Yeah. And what I compare it to is you get a letter in the mail from
credit card
company, right? Credit card company
pre-approved.
says, "Oh, you're pre-qualified for
pre-qualified.
You're pre-qualified for $85,000."
Yeah, when you see that big number, you're like, "I'm rich."
Yeah. You're pre-qualified, and all they know is
nothing really.
Nothing.
Yeah.
They just know that you may need $85,000 as an example, and then you send in. So that's your pre-qualification.
Right.
It's just an empty shell.
Right.
You have the basic information, but nothing's really been done to verify it nor to approve it.
Right.
And so submitting an offer with a pre-qualification letter is one of the worst things that you can do.
Right.
Typically, unless it's something you need right away and that's all you've got.
Right.
But I don't recommend it because you're not competitive. And other realtors, other professionals will see a pre-qualification letter and say, well, nothing's really been done to verify any of this.
Right.
There's no weight to that letter, really.
Right.
Would it have more weight if it was like a buyer's market, so to speak? Because there's, that's...
Is that me?
No, something. Yeah.
Maybe.
Yeah, that is me.
Would it have more weight if it was like a buyer's market? Because obviously the sellers are trying to get momentum there, and you send that letter in with an intent to eventually buy the house.
Yeah, but then we can have obstacles, right? So once he runs the pre-approval, maybe he doesn't make that much money. Maybe he has more debt, because a lot of the times a client, right, comes in and says, oh, I only have one car payment. And then he runs the credit and they have 3 car payments. Yeah, maybe they're just paying one car payment, but they co-sign for somebody else. And so therefore they have to consider those 3 car payments.
And unfortunately, the buyers don't know that those other 2 car payments
are affecting them. Yeah.
Or affect their ability to qualify or get approved. So you run into that problem, but Yeah, and even in a buyer's market, unless there are limited buyers in the market, and you're the only one submitting an offer, well, then
you can take your time.
But
you can take your time, right?
That's more. That's just more to get your foot in the door. It's not like you're buying the house,
right?
And
a lot of them, a pre-qualification letter is good for a showing. Some realtors will require a pre-qualification letter. Hey, have they even talked to a lender?
Right.
There you go. Here's your pre-qualification letter. They've at least told us that they're interested and that these are their details and they could qualify for this home.
Right.
And that opens a door for showings.
Okay.
Because sometimes without a pre-qualification letter, you can't even show the home.
Right.
If it doesn't qualify for showings, they at least can go to open houses or whatever, right?
Yeah, they can go to, if there's an open house, I mean, anybody can go to an open house. The neighbors, all the looky-loos are always at the open house, But yes, a pre-qualification is good to do a showing, but me being a loan officer, I know that to me that's not good enough. Like I always tell my clients, let's try to get you pre-approved and see exactly where you stand, and we can always work backwards from there. But it's kind of hard to start backwards and try to go forward when now there's obstacles. Now we have to cancel or whatever. So that's why I always tell everybody the same thing. And then obviously if you're structuring an offer, it's very important once it's fully underwritten. That way we know that.
Right. So then there's the other option.
Right.
The one of having an underwriting approval or pre-approval as opposed to pre-qualification.
Right.
You'd rather have a pre-approval. That means the loan officer has gotten the documents, has reviewed the documents, has at least verified it and confirmed that you should be approved.
Right.
Aside from a pre-approval, then you go to a DU or desktop underwriter approval. And that's an automated approval that you get from Fannie Mae or Freddie Mac. You can also get a different type of desktop underwriting approval from either one. But those will tell you what they are approved for and the fact that it is a loan that Fannie Mae, Freddie Mac, or a mortgage-backed security will actually be packaged and purchased.
Right.
So when you do that, the loan's going to be sold. The loan's going to be purchased by the bank or the investor. And as long as you can meet those guidelines on the desktop underwriting approval. And typically what a lender will do is go through all those items on the desktop approval, review them with the client, and request that they comply with them. The best option when making an offer is to make sure that you have all of those items available and ready to submit.
Right.
Yeah. And that's going to put you ahead of everyone else that's making offers. You've already gotten a desktop underwriting approval. You've already got all your documents to the lender. The lender can then communicate that to the other realtor, to the selling agent, and to this listing agent, and let everyone know that it's ready to go.
And there's always, other conditions that might pop up, but at least you are more in there than back here.
Yeah. And then the final one, the final one is going beyond that approval.
Right.
And actually submitting it to an underwriter. You submit all that documentation to an underwriter. You ask them to review it and approve it, and you overcome any hurdles and any obstacles prior to making an offer.
Yeah.
So now the loan will be issued. You're going to get the money. You're going to have the funding. The only thing you need at that point is an appraisal. A clear prelim, a title report, and
any updated stuff that comes up.
Minor items.
Yeah, minor items.
But everything else has already been approved.
Because that's another thing. People, get requested pay stubs, bank statements last minute. And I always try to tell my clients, it just depends on the time frame, right? Like, for example, we got a bank statement and the last bank statement was January 1st, right? And now we're about to close, but we're 2 weeks before, like right in the middle of escrow, and now they need another bank statement. It doesn't necessarily mean like something's falling apart or something's going wrong. It's just updated information because time is progressing. Am I correct? Or
yeah, and the documents are outdated.
Yeah. So now that
you need to update the documents.
Yeah,
They've just been
exactly.
outdated.
And it's minor things. So that's why I always tell my clients, make sure that as soon as you get a pay stub or a new bank statement, just send it into your lender. That way they have it there in case they need it. If they don't need it, then it's okay. But at least you are ahead of the game.
Yeah. Is it weird that I gave Edgar my bank info so he can log in whenever he needed to?
Well, it depends.
That's a lot of trust.
Yeah.
That was a lot of trust. But I was just like, because I was at work and I'm like, I don't know what to do. I don't know what to look for here. Because I wasn't hiding anything.
Yeah. Right. You just need a bank statement.
Yeah.
An updated bank statement, and you were having issues logging in or whatever.
I've had a lot of clients give me their login credentials.
Because they sometimes a lot of clients, we're supposed to be here for the best interest of our clients, right? And a lot of our minority clients, sometimes they don't know how to log in to a banking account or download a bank statement.
I feel like I'm technically inclined, and I couldn't find the links and stuff,
exactly,
especially when months have passed by.
Yeah, and we're here to help everybody, to better the situation. But again, a lot of the times clients work all day and they don't have the ability to go to the bank. And even then, some of the banks won't even print them out for you, or they'll charge you to print out a bank statement. So therefore, sometimes you do need help to upload or download or whatever it is online.
Or what about those banks that are just mobile apps?
Yeah, exactly. Mobile apps, like Chime
Chime, and there's other ones too. Even like the
American Express.
Robinhood. When you're on Robinhood, it acts like a checking account as well. Apple has a savings account on there too, and we're just like,
I have American Express, and it's an app account. There's a lot of things.
A lot of these programs are now integrated, especially because we have blockchain technology and everything else that's going. So a lot of them, you'll submit for an approval, a desktop underwritten approval, and it'll pull up the banking information.
Oh, really?
Wow.
Automatically.
Oh, really?
Like, there's no like privacy law there?
There is, but...
Well, they send you an authorization, I guess.
And once you say yes...
Yeah, it'll just pull up all your information.
That makes sense.
And it'll automatically pull up large deposits and anything else that you've done that needs to be verified. So it adds it to that approval. So it makes the approval process.
And then that way it tells you like, we need a letter of explanation for this large deposit. Where did that money come from or whatever. Right. Cool. So everyone, make sure you guys get pre-approved with your lender. If you guys don't have a lender, here's Rene Martinez, and follow him on Instagram. But fully underwritten approvals will basically work. Like that's what I was going to say.
Because in this market, we're competing against cash offers.
Right. Investors
with a lot of cash buyers because of the transfer of wealth that we're seeing. But in this market, the best way to be most competitive is to have a fully underwritten approval.
Correct.
Then it's like cash in the bank, just ready to get wired.
Right.
You just need like I said, the appraisal and the title report and some other minor items, but your cash is ready to be wired.
Right.
And that puts you in a competitive spot against cash buyers.
Right. Because before, we talked about this several times where there's a client of mine that's a VA, they have a VA loan or an FHA loan or a down payment assistance loan, and they're competing against other offers that, they're conventional or cash offers or stuff like that. And sometimes, a lot of realtors don't have that lending background. So therefore they kind of, it's an FHA loan, down payment assistance. No, we're not going to accept that offer. Oh, it's a VA. We're not going to accept that offer because my seller is going to have to come up with all this money. Can you tell us a little bit about that misconception? Because, I know that it's not required to have a termite inspection clearance on a FHA or down payment assistance. There is on a VA, but there's also exceptions, right? We can get a waiver or have the buyer take care of it. The seller doesn't always have to take care of it. There's so many options out there. It's just,
As a first-time home buyer, and we went through those things. To me, I was like, of course, it should be required to have all these done. Why would it not be?
Yeah, you're the buyer. Of course.
Why do I want to clear termite?
Yeah, why wouldn't I want to clear? So why is that a big? It doesn't have to be. And it comes up, I'm assuming, a lot.
Oh yeah, it comes out a lot.
Well, in a competitive market, you have buyers that are willing to waive everything. They'll waive an appraisal, they'll waive termite, they'll waive. So if you can waive a few of those things, it will make you competitive.
Yeah, it's kind of like, so if he's the seller, right, and you're the buyer, and I'm a buyer, and I come in, I'm like, oh, I'm going to waive inspections, and I'm going to waive this and that. I'm going to offer you this X amount of money. Yeah. But then you come in, and then you're like, well, I'm going to offer you this X amount of money, but I want to get my termite inspection clearance. I want X amount of money for repairs. So now the seller's kind of questioning, like, do I really want to go that route or do I want to go this route? And this is the reason why lack of knowledge, I would say, on some of the agents, that they think that it's required, right? But it's not always required.
Not always required.
Well, the thing with that is, it to me, it just, if I think it's simple, because not everybody who's listening right now is going to understand all the terminology, right? So I the dummy over here, I'm trying to think of it in a simple way.
There's no such thing as dummy. That's why I've told you since the beginning, and I told everyone, I'm like, there's no such thing as a dumb question. Ask, you know?
So when I hear you guys talking about this, how things can be waived for like a cash buyer and stuff like that, I the thing that goes through my head is like greasing the wheels, you know? They're like, you know, paying a little extra for getting a little different treatment. When did that become normal, though?
It's always been like that.
Yeah?
Yeah, so it just depends. I mean, especially in a competitive market, especially during COVID, we saw it way too much. People were overbidding, you know, guaranteeing the difference if the house didn't appraise. And so it was making it really hard for first-time home buyers to even be considered at all. Right?
Yeah. You had buyers that were willing to pay the difference, like you said.
Right.
So they would waive an appraisal, and some of them were $150,000 differences, and they were willing to pay it.
So
I saw one $150,000 in Pismo Beach. I was like,
that's insane. Right. So for you to help a first time home buyer stay competitive, what do you do for them, or what do you advise them to do?
I advise them to do a fully underwritten approval.
Underwritten approval.
It doesn't cost you anything. It only costs me my time. So I'm willing, you know, come in. We will underwrite your file. We'll go through the entire process. We will get you there, and you'll be ready. You will be ready.
It's as good as like a cash offer, pretty much, right?
That's what you.
But you're set at the amount, right?
No, I always, when I have a fully underwritten pre-approval, I go to the highest amount they qualify for.
Right.
Oh, so
if they qualify for $1 million, but they're only looking for $500,000, I'll approve them at $1 million. Because I know that anywhere in between there, all I have to do is reduce.
We didn't do that, did we?
Yeah, we did.
We did.
We did.
Okay, but I mean, but we were like
we did. We always wanted. Remember, I always tell my clients, what's your maximum approval? Yeah. Then we work backwards. You don't have to buy 600,000. You don't have to buy 700,000 if that's your max. You can buy 550, 599, 699, or even the 700. But it's easier to work backwards than it is to try to get an approval for 500,000 and then, oh, never mind. I saw this house. Can I qualify for 700,000? And then you have to do it all over again.
Right.
Okay.
It's a lot easier to just go lower once you know that you're approved for a lot more.
Right.
Yeah, it just sucks that I was 600, not higher.
I know, right?
Because all the houses that we were looking at was like 750, 7.
Yeah.
And even the one that was like at 621, we put in a bid for 600. We maxed it out, and obviously it didn't work out. But it's just very interesting. So the pandemic exposed that process, right? Because before that, it was a lot of you guys were traditional. But then once pandemic happened, the common person was like seeing this happen in real time,
right?
And it just became way more intense.
I think during COVID, because of the low rates.
No.
So because of the low rates, it didn't matter if they paid $50,000 more, their mortgage payment wasn't going to be too affected, you know? Now we're a little bit more conservative, but now our buyers are still, struggling. First-time home buyers are struggling against investors or other cash buyers, not necessarily investors all the time, or a better loan, 20% down. So,
yeah. And going back to that, you have someone that's willing to pay $100,000, difference because of the rate. But in 5 years, if you show them a 5-year chart, they're going to pay $430,000 in interest if they wait and get a higher interest rate.
Right.
So you know what? I'm okay paying that $100,000 difference because I'm getting this interest rate that's going to save me $300,000.
Right.
Over the course of 5 years.
Okay.
Right.
That makes sense.
Yeah. That's why they didn't care if they were paying more.
Okay.
Because you're saving it in a different way.
Mm-hmm.
Yeah.
You're
it's
saving
kind of the
it
same.
on interest.
Remember we were talking about it's like 5 plus 5 is 10, 8 plus 2 is 10.
Yeah.
It's the same thing as just how you see it, how you structure it, I guess.
Right.
Is there, just for next time? Is there a next illustration?
So next time,
is there a chart that you guys use or whatever? Because obviously we talk.
Right.
Numbers are being thrown around.
Right.
And I even said it before. It's like, how much are we supposed to have in the bank?
Right.
You know?
Right. Well, it's different in every situation, right?
No.
Down payment assistance, for example, people don't have the money to put down. So then it doesn't really matter, right? So we work with whatever it is. But at least they need, 2 months reserves or...
Yeah, and that's the other thing. That's why you want to work with a lender that's willing to go through the DU approval and getting that. Because I've gotten a DU approval where we don't need a title. That's on a refinance primarily, but we don't need title insurance. Have you seen that?
Yeah, I've seen that.
So when you get title insurance waiver, that saves you $2,000 or $3,000 sometimes.
Usually I've seen that in a refi.
Definition of title insurance. What is that? I'm just asking for the people.
Yeah, so your title...
I'm just asking for the people because there's questions like this.
Don't question the guy. You said there's no dumb question. And you just looked at him like she's
I'm not questioning. I'm waiting for you to answer, but he's staring at me.
Oh, okay. So
okay.
All right, Rene. Let's talk about this. What's
Title insurance is an insurance policy against the title of the home.
Okay.
The title of the home is what gets recorded with the county. So that's public notice to everyone that you are now the legal owner of this property.
Oh, okay.
And it ensures that nothing else
There's no cloud on title.
affects your ownership.
Right.
If you didn't have title insurance, someone could put a lien on the property, or someone can come back and say, you know what? I had a lien and never got paid. Now you owe me.
Mm-hmm. But you have it, so don't stress about it.
Wow. Okay. Thank you. I appreciate that. I didn't, it's not fine print. I'm not saying it's fine print, but it's just one of those things where like, I just want, right.
It's
been a
important.
year.
Yeah.
It's been a year since we went through all that. Yeah. So obviously when you're in it as a new home time buyer,
first time home buyer.
You
said
you pretty
hometown.
much home time. You pretty much like become sort of like a temporary expert because you're going through the numbers, you're going through all the terminology, and then a year later you forget.
Right. Yeah. So, and it's so much stuff, so much information.
Yeah.
And then sometimes you say things and then it doesn't make sense at that moment. Yeah. And then later on you're like, oh yeah, she kind of mentioned something like that, but what does that mean exactly? Yeah. So that's what I'm saying. Like, it is important to feel free to ask any questions as you want at any time. I mean, you still call me up to this day, so,
yeah,
I'm here to answer any questions.
Yeah. How can they reach you, Liz?
Well, they can reach me at 805-286-6617 or follow me on Instagram or Facebook. I have a TikTok now. Realtor Elizabeth Gutierrez. And then Rene, where can they reach out to you?
They can reach me at 805-315-2632.
And your Instagram or Facebook or anything? Social media?
Yeah, social media, Facebook, Instagram. I don't have a TikTok.
Not yet.
Not yet. I'm not there yet.
Do they go to you first or the realtor first?
So
preferably, go ahead.
So usually it depends. Every client reaches us either to a lender first or to a realtor first. But regardless of the fact, I always refer them back to a lender first, because it is important to be prepared so that when that opportunity comes in, they're ready to go. Mm-hmm. And if they're just looking or like, oh, we'll just wait to see if we find something. I mean, it's all great and dandy, but next thing you know, there's a house that they see and they like. And guess what? Now they have to start the process, and therefore they miss out on that opportunity because they weren't prepared. So I always tell them, lender first.
Lender first.
Yeah.
Got it.
Yeah. But it's not a bad idea to talk to the realtor first.
Right.
I mean, it really depends on what
that's
you're
what I'm
trying
saying.
to accomplish.
They'll reach out to me.
Because a realtor will recommend you with a lender that they know and trust.
Right.
Well, the only reason I asked that question, the chicken or the egg, right?
Yeah.
It's one of those things like you guys are marketing yourselves.
Well, which one is it? The
everywhere.
chicken or the egg?
The chicken or the egg.
In this case, call me first. Call me first every time.
Well, it's just anywhere you go, you see on the yard the realtor's face and phone number, and that's why I'm asking. Is it the realtor first or is it?
And and it happens all the time. I'm telling you. I mean, you guys reached out to me, and obviously you guys had been working with other people, and it didn't work out in the past years or whatever, and it happens all the time. It just depends on. If they reach out to the loan officer, they'll tell you, are you working with a realtor? Mm-hmm. And then they're going to ask you, are you thinking of helping with working with somebody, or do you want me to refer you to somebody? And it's kind of the same thing with us. You know, I asked you, are you working with somebody, or do you want me to refer you to somebody that basically meets your needs? So I used to be a lender, and I kind of like pre-qualify them, I would say. I mean, like, okay, so they're first-time home buyers, maybe this lender, blah, 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 this lender. An investor, they want to do DSR loans or whatever. So then you refer them to a different lender, because not everybody has the same programs. For the most part, they have the traditional programs. Yeah. But, here's another thing. So Rene is one of the lenders that's CalFHA approved, certified. And can you tell us a little bit about that? Because
I do want to go to that, but he asked about reaching out to a realtor that has the signs out.
Right.
And you probably know this better than I do, but a lot of realtors, just because they're a listing agent, doesn't mean they're going to represent you as a buyer.
Oh, that's
so. So there are specific listing agents that will list homes and market homes for sale, but they will not represent buyers. So they'll refer you to someone on their team that is a buyer's agent.
That's true.
Why?
That's a great question. That's a great question.
Because I've heard of scenarios where the realtor represents both. So why not?
Well, a realtor, our job is to basically represent buyers and sellers, but it's personal choice. You know, I can't speak for everybody. Obviously, for me, you know, if somebody reaches out to me, I would love the opportunity to help them out, whether they're buying, selling, investing, or whatever. You know, even if it's a piece of land or a manufactured home. But some agents are very specific, and they're like, nope, we just want to do listings. And any buyers, they'll refer them, like Rene said, to a team member. They have a buyer's agent, or, you know, they'll just refer it out to somebody else, or have somebody else do their open houses so that other agents can get clients that way. Yeah. So, I mean, it's just personal choice. But as a realtor, you're...
So what I'm saying is, you know, even if you call the person on the yard sign, it doesn't mean that's who you're going to end up working with.
Exactly.
You know? So,
good point. I never even thought about that.
Well, that's why I'm here, because I want to ask the silly questions.
That's right. Right.
So for me, eventually, one day we'll buy another house. We'll either rent out the other one or sell it, whatever the case is, right?
Right.
I think a lot of people. I had a realtor on the podcast last week, and I was asking the questions of like commercial and renting out the units, and then also like house flipping, and like what's in your professional opinions, what's more short-term profitable and long-term profitable?
Well, that's another great question. It just depends on, again, the individual. What is short-term and long-term for you? Now, commercial is totally different than residential. So right now there's I have a couple investor partners that do a lot of investing in buying properties and adding ADUs and adding junior ADUs. It is very, very, very common in Santa Maria area, not so much up here in North County. Yeah. But commercial, it's totally different. You can rent a whole building and subdivide and do office rentals, or you can rent the whole building. I mean, there's just so many different things you can do. Obviously, it's going to be cost efficient regardless of which way you want to go, if you want to do commercial and subdividing, or if you want to do rental and, you know, with ADUs and junior ADUs. So, I mean, it's just personal preference again, you know, depending on the circumstances.
What's the definition between junior and the regular ADU?
So a regular ADU, it's an additional dwelling unit. It can be up to 1,200 square feet, depending on the size of the lot as well. And then a junior ADU is basically in the garage. And so it's like a junior, you can do a unit in the garage and then an ADU outside of your dwelling, basically.
So let me ask you this. You've seen the backyard that we have. It's pretty big.
Right.
Could I put a regular
you can
ADU?
put an ADU there. Obviously, you do have to go with the city. Yeah. And you have to get plans.
Right next to the school.
Yeah. So you have to get plans with the city. you are on public water and sewer, so that's not going to be an issue there. It becomes an issue when there is a septic. I mean, this is like a total different conversation, but there's so much to it. But it just depends on the individual, what you're trying to do. I had a client of mine actually not too long ago. He bought a property in Santa Maria, a 4-bedroom house, and he ended up dividing the house, doing a 3-unit, 3-bedroom on one side, and then added 2 more rooms on the other side and made it a 3-bedroom, 3-bedroom, 1 bath, and, rented that, and then it's doing a junior ADU in the back. I mean, it's just, I don't know, depends on the circumstances, I guess.
That's really cool. Like once you start looking,
the possibilities are endless. In other words, in real estate. Yeah,
and then for like commercial stuff, how much can you break it up more? Because obviously, if you like, let's say there's a one with 6 units, right? Is there a common thing where they break up the unit even smaller?
It depends. That's what I'm saying. It just depends on, like, for example, right here, right?
Oh yeah.
So you can make that room bigger or add 2 rooms depending on what you're going to rent it out for. Yeah. So it just depends on your engineer and the city, what allows and all that stuff. Because the city also has to agree with what you're trying to do.
And for Rene, since you handle the mortgages and stuff like that, is it, and I know we talked about it a little bit, when there is ADUs and the plan is to rent it out, can that be used as a source of potential income in the underwriting?
Yeah. You can definitely use ADU income.
Okay.
Yeah.
Yes. So you can use ADU income to either when you're trying to refinance or to sell it, or not sell it, but to buy another property if you want to decide to keep it. Another thing is depending on the zoning. That's another big issue too, depending on how your house is zoned. If it's planned development or R1, R2, R3, you can build an actual unit and not necessarily an additional dwelling unit. So,
yeah. So I guess there's a lot of things that go into, like, so if you have a house and you're thinking about these things, you want to know the ins and outs. What are you allowed to do, what you're not allowed to do. And my guess is a lot of people don't know what to do. So how do they find that information? Obviously talk to a realtor, but then from there, who do you find? Who do you talk to?
Well, you also need to talk to, depending on what you're trying to do, if you have money to build your own ADU, then obviously, you don't have to talk to a lender. But if you do need cash out refi or whatever it is, then you can reach out to a lender and they can help you with that. There's also grants available. I mean, there's so many opportunities out there.
Right, but usually you'll get your preliminary title report or your title report, and that will tell you what's available, what it's zoned for, what you can do with the property. And she just said R1, R2, R3, or it could be
commercial is anything over.
It can be zoned ag. There are different zonings, so you probably won't understand as a first-time buyer or as a typical buyer.
You're just trying to get a house.
Right. You won't understand what all of that means. So the best thing to do is ask your realtor, ask your lender what the zoning means.
Okay.
And how that zoning can affect them in the future.
Okay.
That's your best option.
Right.
Or you could call the title company. They'll tell you exactly what it means.
And you can buy, Rene, for a single family residence, for first time home buyer, you can buy up to 4 units. Am I correct?
Under
4 units.
Residential.
Anything above 4 units, it's considered commercial. So you can buy as a first time home buyer, like a duplex or a triplex, and use the 2 or 3 rentals or whatever as your income as well. Unfortunately, there's hardly any out there, but the possibilities are there as well.
Yeah, I guess that those questions keep popping in my head because you are talking about a lot of people right now are looking for financing support. And I'm guessing if they talk to you about that, like potential, what they can do with what they're zoned with,
right?
That's additional income, assuming they make, I don't know, if let's say that it costs them so much and it adds to their mortgage or their loan or whatever, or they get a second loan. Now they have to make that at least and some. How do you help them decide that? Because obviously there's a number out there. It's just
there's a chart, right? You can analyze. You can do an analysis of what the cost is, what that income is going to be, and what the recovery period is going to be. How long will it take you to recapture that investment, and does it make financial sense? And you don't just want to say, okay, this is a rental income I'm going to receive and I'm going to recover it. That's across the board. Okay, that's my recovery period based off rental income. But you also have negative amortization. You have, when I say negative amortization, I actually mean you're going to be able to reduce the balance on your mortgage. So that principal reduction that you're doing is additional income. It's just going into a different bank account or savings account. And you have to take that into account as well. So you're making money on both ends. Yeah. The rental income plus the reduction of your mortgage.
Mm-hmm.
And with that rental income, you put it into a mutual fund. I'm just kidding.
Yeah, that's another topic.
Yeah, that's another topic.
Yeah.
But yeah, Rene, I know that I had asked him to talk about him being certified with CalHFA or CalFHA. Yeah, it's important to know that because that's one of the down payment assistance programs, and not a lot of people, not only do they not want to do them, or maybe they just choose not to help the masses.
Yeah, they don't understand it.
They don't want to take the time, I would say.
It's like anything. It's an unknown. It's a new product. It's something that people don't understand. So trying to understand a new loan product and trying to decide whether it's safe is scary sometimes.
Right.
You know, it's like someone walked in and said, hey, I have this new program and it's with the city of Paso Robles combined with the state of California. I'd be like, whoa, that already sounds like too much. You know, like I have to deal with the state and the city. Forget it. Yeah. So,
now you're double teamed.
Yeah. So, but the reality is when you get your underwriting approval for your first mortgage with Fannie Mae or Freddie Mac or the lender that you're working with, that approval just goes to CalHFA, which is a state entity. And they look at it and they go, oh, you're approved. Check, check, check. And then within about 24 hours, you have your approval for the down payment assistance. So it's actually really simple. It's just a lack of information and lack of knowledge that scares people. But CalHFA is a great program. You also have the other program, which is GSFA, Golden State Finance Authority. That one's really good too for first-time buyers. And both of them, I mean, what do you want to know? They're extremely beneficial.
Well, I know that they're extremely beneficial, but I thought it would be important for people to know that you do have these programs because a lot of the times, you know, people are the minority. I say minority because there's a lot of first-time home buyers, a lot of people that don't have money to put down or feel like they don't have a lot of credit, and they go to lenders, you know, not necessarily a broker, maybe a bank, and then they get discouraged because, you know, they tell them, oh, you don't qualify, or unless you have $50,000 down, you're not going to be able to buy.
That just reminded me of something, and I'm going to cut you off. Sorry, but
no. I
had a buyer that we got pushed. They were like at 46% on their debt to income ratio.
Debt to income ratio, DTI.
The DTI, and then the underwriter reviewed it, and they pushed it to 53, which means they're no longer approved. Because you can't go over 50% on your debt to income ratio for this specific loan that I was doing. So all of a sudden the underwriter reviewed it and said, sorry, here's your denial. You can restructure it. They need a larger down payment, all these other things, right? And I said, that's impossible. What's going on here? I reviewed the loan, went in depth, and so the accounts that were in question that caused the debt to income ratio to go higher was that they had authorized user accounts. So unauthorized user accounts, you just delete them. Right. And a lot of lenders don't know that. Right. Even this underwriter had forgotten about it. Right. So.
And can you explain a little bit about that? So an authorized user means.
But what I'm getting at is that, in your case, you might be denied by one lender. Yeah. And another lender will review and say, hey, I know this. Right. And I'd be able to help you get approved.
Life hack.
Right.
Yeah. So authorized user accounts, like you were saying, is when you get added to a credit card or get added to something and you're not the primary account holder, you're not even a co-account holder, you're just an authorized user on the account.
Right.
Interesting.
So those aren't necessarily your accounts and you can remove them from your debt to income ratio.
Also, if you have a car payment and you owe less than a year.
That too, 10 months.
You know, you can take that out of consideration. If you have 3 cars, but you're the co-signer and you have proof that somebody else is making payments,
you can remove
that too. So there's opportunity there as long as you have somebody that's willing to take the time to actually sit down and look at all your paperwork and scenarios to get you pre-approved.
Yeah.
So, yeah.
I like to think this is a good podcast.
Yeah. If there's a will, there's a way. I always say, si se puede, you know? I always say that.
Yeah. Yeah.
Do you want to say one motivational quote? We can go around and say a motivational quote or ask them.
Jeez. Motivational quote.
Well, yeah, actually, Rene, if you want to say something inspirational or motivational quote to your followers,
I'll leave that open to you. I'm at a loss right now.
Actually, I read the Jesus Calling every day, and today, you know, sometimes there's days where people feel overwhelmed and like things are always going the wrong way, and you think like, oh my gosh, like why me? Another obstacle, like something new or whatever. And today's message actually said, you know, like I'm here, you know, like right when you see all these obstacles, remind yourself that, you know, that I am here. And I find people that are, you know, like you know, not necessarily weak, but humble to accept the fact that, you know, we want him to carry us on. But anyways, I just thought I'd share that.
But that leads, you know, and initially my thought was, my quote was going to say, give it to God.
Yeah, give it to God.
That's the only thing. Give it to God. And
we're over here like,
you know, that goes with everything. And I was listening to something today, the same thing. And it just reminded me, anxiety, give it to God.
Right.
You know, fear, give it to God. Yeah, just let it go.
Talking about fear, today I always listen to podcasts and stuff like that. They were saying that fear is actually anxiety, you know, like excitement. It's like butterflies. Like you think it's actually fear, but your mind's telling you it's fear, but it's actually an excitement. Like, you know, when you're in the roller coaster, you're like, I'm so afraid, but it's actually an excitement. It's just how you portrayed the definition of fear.
Yeah, you can manipulate your brain to believe that it's excitement.
It is excitement. Positive vibes.
I'm so scared of that roller coaster, but you know what?
I'm excited to ride it.
Yeah.
Well, this was a fun podcast. Paso Robles Podcast and Get Real with Liz. Yeah.
Before we close, Rene, you have a little special guest here.
I do have a special guest, Nicholas. This is Nicholas, my son.
You want to say hi, Nicholas?
You want to say hi? Maybe he doesn't. But
and I just want to say,
there he is.
I want to say thank you, Rene, for coming all the way from Santa Ynez today. You know, it's pretty much your whole day, you know, driving here and back. And so I sincerely appreciate you coming all the way over here to take the time and, you know, explain a little bit about what you do and who you are. I know Rene for a long, long time.
I owe it to this girl. I was scared to get into the business, and she was like, "Do it. Let's go. Come on, join us." Yep. And you and you know, you pushed me to do it. So thank you. And I wouldn't be here unless Elizabeth said take the jump.
Well, we're good friends, and we fight, and we always make up. But that's what friends are for, you know?
After knowing you for 20 years, of course I'm going to fight with you at some point.
Right. No, but thank you again. I appreciate it. And anyone, if you guys have any questions, everyone, if you guys have any questions, any concerns about your loans, if you guys want to refinance or try to get approval, try to get a underwriting approval, not just a DU approval. But
yeah, let's make it competitive.
Yeah.
Let's get you competitive.
Yeah, that way you can beat other offers, you know, and make sure that you guys are ready to go. It's better to be prepared and not prepared. I always say there's no such thing. Oh, here's another quote. There's no such thing as you're lucky, you know? I always say, no, it's not luck. It's just when preparation meets an opportunity. So if you're prepared and the opportunity is there, that means you're blessed, you know? So that's it.
Hallelujah. Amen. All right. Thank you.
Thanks. Bye.